Hey everybody, you are kicking it with the homeboys. My name is Clint Wetherill, and this is my friend and co-host, Mr. Scott Adams. And today, we are bringing you another episode of Moron Real Estate. What is Moron Real Estate? Well, that is where we comb the internet. Actually, we should say our producer combs the internet, finds real estate clips, and Scotty and I are calling them bogus or legit. So if you're out there posting bogus crap, real estate advice that doesn't make any sense to the internet, the homeboys are coming for you.
You're not safe.
So anyhow, let's dive right into it. You ready, Mr. Adams?
Yes, sir.
Clip number 1. Let's do this.
Wow, love the house. How much are you selling it for? $300,000. I'll take it and I'll pay all in cash. Are you sure? I wouldn't do that if I were you. Yeah, that way I won't have to pay any interest to the bank. But a mortgage is one of the cheapest ways to borrow money. If you can borrow the $300,000 at a low rate of 3 to 4%, then you can invest the rest in the S&P 500 index, which usually gives an average annual return of 10%. Oh, so I can make more money through investing my cash than I'll pay in interest on the loan. Exactly. That's genius. This is why I follow you.
All right. So the stock market only goes up, apparently.
It's an elevator ride 100% of the time.
Yeah.
I read that on the internet.
So it must be true.
It must be true.
You know, there's a little bit of truth in this. You know, the S&P average is well above what you can borrow money for. But you're talking about using your home as a bank to then invest, which is risk which always has risk with it. You know, so there's some truth in what he's saying. Is it a way to live? I don't believe so. I like sleeping at night. I like having equity in my home. I like not risking, you know, my home's worth in the stock market. You know.
Yeah, we believe in owning of real estate and not leveraging everything to the hilt. Yes, interest rates are low, and there could be instances where it does make sense to have a loan. Like, you know, my personal example is, you know, I live on a lot of land, and we own the land and the house free and clear, but we're planning on building back behind it. I put a mortgage on it, so we could just pay for the house in cash, you know, later. I think that there's some, you know, validity to that. Always banking on the S&P 500 return. Did you say 11%? Is that what he said?
10%, whatever.
I used to hear 11%, but whatever he said, keep in mind that is over the course of time. So even if you go back a couple years, you know, when the market went all the way down to 16, say the Dow Jones went to 16,000 right after everyone was scared about the pandemic, you know, and then it's jumped all the way from 16 all the way back up to, you know, 35. You know, it includes all of that. So I mean, there's years that, you know, you see 100%. There's also years where you see 14,000 go to 6,500, right, like it did in the Great Recession. So, you know, I think that he's using more of a financial advisor's mentality, where a financial advisor says, hey, it's all about putting your money in the market. They're given a flyer and say, you know, the average return is 11%. So give me your money and keep your money with me forever. You know, so, and that's, there is a lot of truth to that. I think that's more of like an old school mentality, like your dad and my dad's, you know, mentality of, yeah, buy a strong company and, you know, never sell it.
Fundamental investing.
Hold on to it. But, you know, with the days of day trading and, you know, instant, you know, transactions with stocks and bonds and really whatever you want, those days are over. I mean, it's so much more volatile.
It's much more volatile. That's the key word. It's not a stable, the most stable platform to put your money in anymore. And again, you're using your home as a piggy bank to gamble with. That's the bottom line. It's a gamble, no matter how you want to look at it. Yes, historically the S&P, you know, is up, but timing matters in that, like Clint said. You know, when you buy in, when you get out, and that's if a robot does it. You know, Clint and I we are the experts at telling you when you when it comes to the stock market, do the opposite of what we do. You know, we do everything.
I'm not good.
Yeah, we're based in fear.
Correct.
You know, we have significant besides the real estate, we have 401ks and IRAs. And
I am the biggest wuss you have ever seen in your life when it comes to the stock market.
Yeah, sell low, buy high.
It's what I do, man. It's what I do.
Yeah, but as far as real estate is concerned, leave the darn equity in your house. Just stop using your house as a piggy bank. You know, it's going to appreciate over time. You know, if you want to look at historic averages, your house will appreciate it. You know, in the Midwest, 3 to 4%, higher on the coastal places. You're going to get appreciation in there. Don't be greedy. Don't risk your darn real estate portfolio just to chase some returns.
So we're not calling moron, but we're saying be very cautious when doing that. So anyhow, good
Number
clip.
2.
Next up.
Do not buy a house or sign a lease without this tip. Dab. Stick around at the end for the bonus tip. I got a secret. December's the best time to buy a house or sign a lease. Why? A lot of people aren't looking right now. Also, people have more flexible schedules right now. Bonus tip, people selling houses in December are generally the most desperate, so negotiate, negotiate, negotiate. Follow my page for more real estate facts, y'all.
I love the dab. She threw
I
a
never
dab
got
in there.
that phenomenon. Like, you know, who started that whole thing?
I don't know, but my kids are in college now, so it was real popular when they were in junior high. There was dabbing going on in my house like you wouldn't believe for years.
You seem like you'd be a dabber.
I'll dab. I'll
dab?
dab all day.
You'll dab it up.
Yeah, I'm not scared to dab.
But I mean, this is relatively new. I think she's a little late to the dabbing party, isn't she? You know.
Hey, she's trying to reach
Should
those
it be
millennials.
more like one of those.
Yeah, Ivy's good at that.
Thing.
Well, this advice is interesting. In a traditional market, it's pretty much true. You know, I don't think it really applies right now, just because everything's hot.
It doesn't apply at all right now. But you know, like in property management, you know, we always try to extend leases out to where they're not ending around holiday time,
right?
December, as she says it, or cold periods of time.
That's probably the reason we have so many random kind of off number of months leases. So our average
14 months, 15.
There's a lot of 15
16,
months because if we rent in December, we don't want them renewing in December. So our leasing agents are trained to extend that into the spring.
So in a more normal real estate market, which we're in the furthest thing from a normal real estate market right now. Yes, in December, more people are focused on holiday time and kids being out of school, and they're not as motivated. But right now, when everyone is, buying 52 cases of toilet paper at a time and MREs and, stocking water in your basement, this doesn't really apply. Like, everything's renting really quick. Everything's selling really quick. I mean, it's this world's lost its ever-loving mind.
So in a normal market, this makes a little sense. I could get into the weeds on some statistics on it. The problem is in December, there are many less listings. So the market kind of adjusts for this advice in a little bit of ways. So in the spring, there are more properties that are available. So there's a chance you can negotiate maybe just as much or more in the spring, depending on the market. But generally speaking, she's right. It's December. We call it situational buyers and renters in December is what we call it around the office, which means that they're out there looking for a property because of divorce or an eviction or some reason. Why else would someone be out in the freezing cold of winter, specifically we're talking the Midwest, in the freezing cold of December around the holiday times trying to find a place to buy or move? It's a rare thing.
But let's go backwards a little bit. So let's just say you go back 5 years ago and maybe a $250,000 home, you would be able to purchase it for $240,000, 5 years ago. Today, that $250,000 home sells for $310,000.
Right.
So,
if the listing price is $250,000, someone's going to come in with a $310,000 offer.
Correct. That's what I'm saying.
Right.
That's what I'm saying.
That's
bananas. That's how messed up the world is today. So, anyhow, all right.
Yep.
You ready?
Yep.
So imagine getting a better return than a fourplex or an apartment complex, and the only maintenance that you're responsible for is electric, water, and sewer.
See, as a mobile home park landlord, all you're doing is renting the dirt that people park their RVs or mobile homes on.
And the returns are higher because the investor competition is low because of the stigma of mobile home parks. Less work, higher returns.
I like this. It's neat.
Not really my area of expertise.
Nope. Yeah, I have a good friend who's in the trailer park business, and I haven't talked to them in years, but they were incredibly lucrative properties for them.
I've been called trailer trash before.
Right.
I don't know if that was
that was my nickname in high school.
That was your nickname in high school?
but I looked into trailer parks, and I think I told you about this. This was 20 years ago before we came together, but it was this is so strange. But people who have sexual, whatever the predator thing is, where they can't live within certain places, there's actual trailer parks that specialize in offering them homes because they're far enough away from the schools and all this.
Oh, wow.
Yeah, and so
those community activities are getting very interesting.
Yeah, this is a real thing. And so they need places to live. And so when they come out of prison, you and I have done some prison ministry. You more specifically on us. You know, people have crimes in this area, but when they come out of prison, they have nowhere to live a lot of the time, and so their parole officer or whoever will direct them to these trailer parks that are just outside of city limits in a lot of places, and the rents are 4 to 5 times what a normal rent is for a trailer park. So I looked at doing this. I didn't want to be involved. That was the only reason. But
well, I mean, there's trailer parks and then there's RV parks. I mean, I think that's 2 totally different things. And I don't know that he was real specific in that.
His look in the pictures, it looked like a nice RV park.
Correct, like where people are stopping for a night, 2 nights a week. Sometimes they stay for longer, But then there's, actually, double wides,
right?
And it's not my line of expertise. And we always say, stick to what you know. Don't put your irons in so many fire, but I don't know. I've always heard that the returns are great. I'm looking at long-term investments, and something that has a shelf life is not something that I've ever really been interested in.
Yep.
But
that's a great point. So the shelf life on these is significantly shorter. You're not building as much wealth along the way because the asset, like he pointed out, is only the land. That's the only asset. And unless you're in a very special area, which it's probably not going to be a trailer park if it is a special area, you're not going to get much appreciation on the raw land. We're long-term investors who believe in wealth through owning assets that appreciate and good, solid real estate. And this is just a little outside of our expertise. I've heard the same thing, that it can be lucrative. Is it for everyone? Definitely not. It's definitely not.
I think the management would be a lot more intense.
It'd be a nightmare.
Also.
A nightmare.
We're not really.
Our financial advisor, who we just talked about, his mother-in-law made very good money in trailer parks in Florida over at St. James City off the coast of Cape Coral, and she owned most of them on that island and did very well. But it's the same thing she said. She got out of them because they wore her down. I mean, she was exhausted from it.
Right.
So, yeah. All right. Next.
Letting the rent get unpaid for too long without serving a notice.
Right. So that's the biggest mistake that I make. They text me and they're like, "Oh, I'm gonna make it," and I'm like, pulling at my heartstrings. I'm like, okay, I'll wait. So I've learned that working with them doesn't mean necessarily not collecting anything and giving them all this freedom. It means setting date and expectations. Okay, so I understand you can't make it, and I want to work with you. Can you what can you pay today? And then this is the day that I'm going to serve a notice if you don't pay.
No, I think it's good advice. That's why I always tell our customers, clients, potential clients, that it's important to have a property manager, because you can use that leverage. If I'm a property manager and we're communicating with our tenants, you can take the stance of, look, I'm sorry, Mr. Tenant, but I've got a duty to the owner of this property. If you don't pay, you don't stay. I'm sorry. I totally agree with having a payment plan. And generally, if tenants are communicating and answering their phone when you reach out to them, responding to emails, and they're telling you that, yes, we're behind, but we're going to get caught up. If they're communicating so many times, they will come through. Whenever they're not going to come through is when tenants shut off communication and they're not responding to anything. So, yes, if you say, okay, well, you're going to get caught up this much on the 10th and then this much on the 20th, and then by next month you're going to be caught up, totally agree with that. I think that having a policy of saying, okay, if they haven't paid their rent by the 10th, we're filing an eviction. I think that's a really, really dangerous thing to do. You're gonna piss off your tenants that may be, still may be good tenants. There's some tenants that historically pay late, but they've still been in the property for several years. You're gonna have more attorney costs. You're gonna make a lot more moving parts. If you can keep that tenant in the property, that is your best bet. You get a tenant out, then you're going to have a period of vacancy. You're going to have updating costs. You're going to have leasing, costs. You want that tenant in the property, so you don't want to just pull the plug the moment something goes bad. If they're communicating, yeah, you can still make it work.
Yeah. So 2 caveats to this, which is make sure you document everything. That's one thing that's really important. We're lucky. We've got a large property management company we own, so the software itself documents all text messages, all phone calls. It's all recorded, which is great. But if you're an individual property owner, make sure you document everything that happens. And then number 2 is it matters what type of properties you invest in for a lot of reasons, including this. If you're investing in solid investment homes, not low-end ghetto properties, you have a lot more stance with this. With the low-end ghetto properties, you're constantly doing tenant turns. When you have higher-end rentals that are good performers and are good homes that people want to live in, the people know that they need to pay or you're going to find someone else to live in it. And it's just a different type of clientele. That's why we always suggest our clients really focus on that B+ to A+ level investment product.
Couldn't agree more.
Yeah.
Well, that's it.
Yeah.
That's our Moron real estate. We had a lot of good tips today.
Mm-hmm. Not too many morons. There was a couple of questionable pieces of advice, but I wouldn't necessarily call any of them morons.
It's kind of nice to have a show like this every now and then because I worry about your blood pressure and you getting worked up so much.
Yeah. It does piss me off when these people are out there just giving the worst advice, and then I see they'll get 1 million likes and millions of views.
Sadly, people dig stupid advice.
Yeah.
It's a phenomenon that's hard to understand.
And it's usually sexy advice. It sounds great, and so it's very attractive to hear what you want to hear. Sometimes the best advice is the stuff that you don't want to hear.
I couldn't agree more.
Yeah.
Well, that's our show for today. Thank you for kicking it. We are the Homeboys. Please tune in for more on real estate again. We're sending out daily TikToks. Let's check out the podcast every week. If you're out there posting crappy stuff on the internet, terrible real estate advice, me and this guy are coming for you. Till next time, we're the Homeboys. Take care. Be careful. Let me start that over.
That was awesome. You knew what that was?
At the Homeboys pod, right? Okay.
Holy cow. I almost interrupted because I was like, what the?
Let's stop.
How do you know this?
It's on the
How do you know this? It's on what? Yeah. The piece of paper that you just glanced at?
Mm-hmm. Yeah.
Okay. Rain Man. You're Rain Man in the weirdest ways. Like you're just an idiot in like a lot of things. There's certain things you come in and it's literally like having Rain Man with you.
Totally redeem yourself. Yeah.